Hi everyone, thank you for joining us. I'm René Nelson with Pacwest Commercial Real Estate, and today we're asking the expert Isaac Grant from Northwest Community Credit Union. He's the commercial loan officer that I like to use in regards to multifamily apartments. So Isaac, thanks for joining us.
Thank you for having me again. Pleasure to be here.
Yeah. When I send a client to you to go through the loan process, I know you want to look at their personal financial statement. Tell me what you're looking for in the review of the financial statement.
Yeah, the personal financial statement, and I think you're going to have a template on your website, is going to be made up of, first of all, your assets and liabilities personally, and then also your income and expenses on an annual basis. So typically what we're looking for mainly is going to be some liquid assets. We want to see that you maybe have some cash, you have some ability to be able to support the debt that you're taking on in the case that the subject property doesn't perform as we expect it to. So we want you to have a strong personal financial statement in regards to some liquid assets. It is good to see some other real estate assets on there as well for some more seasoned buyers to see how they've managed properties previously. What we don't want to see is too much leverage. We don't want to see someone who has low cash liquidity, a lot of assets that aren't going to be producing cash, and in that way it's going to be much harder to get them qualified.
Okay, you had mentioned in the past that you had someone that you were not able to help with them with financing, even though they had a pretty healthy asset portfolio. Talk to me about that. What did that look like?
Yeah, it was an interesting scenario, and it's come up a couple of times actually with folks that have very big net worth. So maybe they have $10 million in net worth, but a lot of it is tied up in fixed assets, and some of those assets aren't producing cash. What we're looking at as a lender is cash flow to be able to repay our debt. So we're going to lean heavily on the subject property first, but when it comes to the personal financial statement, we want to see assets that are producing cash to be able to support the loan from a secondary position. So there are scenarios where someone may have a high net worth, but they have non-cash producing assets, and therefore we can't get them qualified for a loan opportunity.
Okay. And ideally, how much cash would be a good rule of thumb to have in the bank?
Again, it's a case-by-case basis, but a good rule of thumb is to have 10% of the loan that you're looking to acquire.
Oh, that's interesting. And does it have to be liquid, like cash in the bank, or could it be a combination of retirement accounts if they could access those retirement accounts?
Again, that's going to be case-by-case depending on what those retirement accounts look like. The best rule of thumb to use is going to be real cash in a bank account.
Okay, something that you could access. So
Correct.
In the event, maybe if it's a commercial property like an office and your tenant moves out and you have a vacancy,
Right.
You've got a bank account to dip into to cover your payments.
You got it, Renee.
I saw that smile. I know where you're going.
Yeah.
Isaac, would you join us for our next series? I would love to talk to you about the leverage component that you use to figure out how much of a loan someone would qualify for.
Absolutely. We'd love to talk about that.
That sounds great.
Thank you.
I'm René Nelson with Pacwest Commercial Real Estate. Thank you for watching.